This is Brad Matheny. This is a quick little silver update. It applies to metals. I was asked by a friend and subscriber about what I think metals are going to do, so I thought I'd put together a basic video. This is a daily chart. We're going to start with a monthly to give you an idea. And what we're looking at here is the basic concept of the growth in metals related to the actual fear in the market. So now we have established an upward channel. We can go all the way back over here into this area, back to 1979, the Hunt brothers um, chasing and trying to corner the silver market. You can see that we've gone through a growth phase here. Now we're into a phase where I think metals have a very explosive move here. So this was explosive, yes, but nothing compared to this. And what you need to realize here is in a period of about 8 years, we went from $1.25 up to $40. That's a 3,000% move. And if we were to take a look at this area from 480 up to here, we've got about a 2,000%, 2,600% move. And if you take a look at from these lows, or actually recently from these lows up to here, we've got a 560% move. Now, if we were to get up into that $3,000 range, 3,000% range like we had back here, you need to understand that silver is capable of moving substantially higher. $600. Okay, now this is going to come in phases, and this is likely going to peak out somewhere around 20, call it 43 to 2045. So you need to understand that, and I'm doing it kind of clearly. You can see out over here, potentially in this type of an area. But when we come right down to the actual scale of what is taking place here, and it's kind of hard to see on this monthly chart. So I'm going to go back to weekly and explain to you again that we are moving through a flagging formation, which comes down approximately like this and comes across essentially this low out into this area as a flag. And we are currently at a A, B, C, D, E move. Now, the E move here should be roughly equal to the flag move, which is roughly from this low up to approximately this high. So if we were to get that same move, we're looking at a move up into the 160 area. Now, I've been telling people for weeks, well, actually months, that I think this 140 to 160 plus area is really a target range. And what that means is that we're going to be looking at a rally that is going to likely move in phases up into this range. So you need to understand where we're at with this. And I've tried to teach people about what I call the defense levels. We'll highlight the defense levels here real quick. Here is the primary defense level running across this area. And then we have a secondary defense level. See if I can drag it down in this area. Now, we're not likely going to see this low. Okay, we've seen the 50%, 60% retracement. We've seen the flagging formation. We're likely going to see a move up into this defense level, up here into the 100, 108 area, stalling briefly, getting above it, stalling again up near this double high, because that's going to be a big psychological level, and then rallying up into the 150, 160 area. Now, time-wise, it may not take this long, but it will happen, in my opinion. So at this particular point, this gives us our 100% move. This would be a move here that when we take a look at this, off of this low, we consider the move here again from this peak down to this low. this would give us the ability to say A, B, potentially C, D, E, possibly, or this could still be a solid single wave up into A, giving us an A, B, C, D, E wave one, indicating a potential moderate pullback from this level, possibly back down into the defense level as a pullback, then generating a rally phase from here, which would have to be larger than this phase. So understand that we would likely be looking at a move potentially in excess from this level all the way up potentially to 1.5, 1.6 times this initial A move. Maybe even much higher. So again, this would be about a 1.5 to 1.6x if that C move actually carried out at 2.5, 2.6, which could happen. There's 2, 2.5, 2.6. We could be up in this area as a C move. Now, why do I think 2.5, 2.6 is capable? I believe we're moving through a very large expansion phase, and I believe that we could see a move from this area up into this area very aggressively, really substantially higher into this move. So, again, this little move here is what we're dealing with right now. Long term, you need to be able to play this move out. And that puts us at C, which would likely be a 5-wave structure, meaning we would come up to here, A, B, C, D, E, something like that. But ultimately, then this puts us at a D correction coming from here, possibly back down into this area. Remember, probably not getting below this low point here. And again, this is, I tend to draw things in proper Fibonacci structures. So this would probably be at around 300, 305, be a pretty solid support area, meaning that we would get a D correction. And then at this point, we would be looking at an E move, which could likely be, again, at least half of potentially this move, which I would suggest would be possibly something like this, maybe a bit higher. It's got to get above this level, so I would suggest a knee move up into this area, possibly with a blow off top, rallying up from this level into a consolidation phase, then a blow off, and then rolling over. And remember, this would likely be somewhere out in the 2041 to 2045 area. So I've drawn it a little aggressive. This is 2043, 2045 area. But again, this is, if you consider expansion of risk while the Federal Reserve attempts to continue to manage this, you're looking at a huge move that needs to be played in waves. Okay, so now coming back over here to take a look at exactly where we're at right now, the move in silver. If I come back over here and try to explain what's going on, I get this set up so I can use it the way I want. Okay, so now what we would do here, what I would do here, is I would take a look at trending capacity across various trigger levels. And in doing so, I would extend to the right, and I would set this up with variant colors, possibly making them slightly smaller. And what I'm trying to do here, guys, is use a GAN technique to attempt to identify peaks and or troughs that are occurring in the past to give me an ability to see where and how price is going to attempt to target a future trigger level. My study of GAN has taught me that looking at these historical price factors through highs and lows. Remember, what I'm looking at here is targeting a major high, coming across a secondary peak, and then finding out if it aligns with a third peak or trough. And then it aligns here with this level, and you can see as we move up over here. So I'm going to change this to a purple color because I like this aligning. This aligns here with these troughs across this support channel. And this is just a variant targeting this level here. I'm assuming this is a blow off high. So now as we spread this out, so I'll make this red. And now you play out how this actually comes into play. You can see here that we have, and move these a little bit. All right. I feel better that those are in place. Given where we're at here, and given the fact that we've targeted these levels, these purple and gold support levels through this area here, this is the next move. In my opinion, playing this out, the next move here is going to target these purple and gold levels. That's 80, 90. So basically, right in this area would be our initial rally phase. So this is going to be about $90, and that's going to be about a $15 rally. Then we will likely stall at that point, rally up to above the defense level. So if I were to redraw this, I'll leave that. This will give you an idea of how my brain works and how I study things. So this means that we have a rally likely up to this area, then up to above the defense level, and then up to potentially this upper level. Now, that would likely be like this: rally, stall, rally, stall, rally, stall, rally, up into that defense level. And that would give us our potential A move up to here. Now, at this point, like I said, we would more than likely stall into a B phase and then move into the more expansive C phase. So you can see how we have to play this in stages. Now, why would gold move and silver move into an expansive pullback here? Well, that's structurally what price has to do. Okay, we cannot move into a big expansive A, completing B, moving into a C move without having the B move take place. So we're looking at a move here from 70 up to about 180, 160, 170, maybe 180 up here for the A. So we'll set this up to about 180, potentially having a blow off top. Then we move down into a B phase, back down to about 100. And of course, the world where thinks silver and gold are ending their big rally phase here, like they always do, and then moving into this big expansion phase. So please understand that structurally, this move that we've seen already is nothing. Okay, this is really nothing. This is really just an A move up from this particular period here This was the global financial crisis. This is going to be the gold and silver appreciating through a economic phase that we have not seen literally in hundreds of years. Okay. So what I'm trying to tell you is if you're going to trade this move, what you need to realize is again, we are in this flagging formation, getting ready to make the first move up to here, which I'll label as, let's call it number one target. And then we have a slight pullback going up to the number two target, and then eventually up here to the expansive breakaway phase of the number three target. And again, this could end wave A. This could again be, if you need to understand this, with the way the Elliott wave works, okay, as I've explained to you from this low here, remember how I counted the A, B, C, D, E? Well, in reality, this could be just a wave one. This could be the, let's call it uh, lowercase a, lowercase, oops, lowercase b, and then lowercase c. And what this would mean, folks, is if you understand what I'm telling you, is this could be all of D and E. This could be all of just wave one. So we'll see how it plays out when we get over into this area. Because if this is all just wave one playing out, then this would become the end of wave one. This would then result in a pullback, possibly a little deeper down into this area. And then this would start A, B, and continue onward to be a basically wave C. So we have a lot of understanding what this is and how this is going to play out. But right now, you're looking at a move in silver that's going to likely target this upper level, just like you see right here. Target one, target two, target three. How can I tell you this? Because structurally, this is what price is doing. We're moving through this sideways flagging formation. We're going to break out, likely come back into this target level because of the GAN area, then likely run up to this secondary area, which again is horizontally essentially right here. Into this area, which is our targeted tangent of the GAN cycle moving higher. And then from there, we would expand to the upside into the blow off top, roughly around 160, 155, 165. So that's what we're looking at right now. We have to play this move efficiently. I believe this move is going to happen fairly quickly through the end of April into early May, up into this area. Then we'll pause. Then we'll probably move into this area into July, August. Then we'll probably move into this area through the end of 2026 into early 2027, peaking here and then moving into a pullback. Now, the pullback may not be as deep as I'm suggesting, but it's going to probably be a pretty decent pullback at this point. Likely from this area, maybe maybe down about 20, 25%. So probably back down into the 110, 120, 130 area. Okay. So how you should play this is you should prepare for, let's call it leg one, pull back, leg two, pull back, and then leg three, pause, rally to an ultimate eye or washout eye. That's how you should prepare to play this. You're going to have two or three separate moves here. They're each going to be playable. You need to basically understand that we're playing through this apex phase. We're going to get volatile down here. I think we're going to get a solid breakaway to the upside, but we could see a lot of volatility down here. Okay, guys, hope this helps.